Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 6th of November. So we've had one of the biggest weeks from an economic and news standpoint with the election, and we've also got non-farm payrolls tonight. So the markets are going to be very, very interesting, I guess, for the next 24-hour period. But we expect that the trends and all of the big movements are probably going to start to happen from next week. We find a lot of the majors at really, really good support zones. So we're going to go through those today and probably talk more about what the opportunities are going to be moving forward rather than probably trading and setting up for today, because it's probably not the best day given that we haven't got an election result and a non-farm payroll Friday. You've got to be very, very careful when you're trading these. You want to be probably doing really short scalps. We might see if we can identify any really short ones, but more than likely we're going to be looking at the bigger plans for next week once we get a little bit of clarity as to who has won the US election and also the non-farm payroll results, so we can get some trends hopefully starting and getting involved with those. All right, so the first one we'll have a look at, as we normally do, is the Aussie USD. Okay, we'll have a look at that on a daily chart. The big key red level that we've highlighted many times over has stood up again. You can see at the start of the week it was around that level, but it's certainly boosted up. Look, it didn't really provide a really good trading opportunity unless you were absolutely scalping this week, because obviously the election started on Tuesday or earlier in the week. So it didn't really give us a lot of great opportunity to go in for a lot of confidence, but it certainly has bounded off that position again, as it often does off these role reversal zones. So if you did get involved with that, you should be pretty happy, and you should be pretty much taking your profit now, because obviously it's hit this new resistance zone. You can see here it was resistance at this point here. Right through there, and it would probably pull it up again. So it's around that sort of 72.50 again, so pretty good level. It's stayed within the bounds, but this has had a big movement. You can see its movement this week has been far superior to what it's been doing in recent months. So definitely a lot of the volatility in the market has kicked in on that. And if you're able to take the shot off the 70-cent mark, you've probably done fairly well. The moving averages are still flatlining. Obviously, we haven't seen them. We can see the red one starting to kick up above the 50 now, so the 20 is about to cross the 50. But again, it is at a resistance level, so I wouldn't be overly keen on continuing with this. Probably if you are going to scalp it, I'd be taking to a smaller time frame and maybe shorting it back down to this resistance and support zone at the green line, which is around that sort of 71, probably call it 50 areas, probably a little bit more likely, which is also a pullback to the moving averages. So that's what I would be looking at if I was going to trade that, but just be mindful that the moves might be a little bit smaller today, unless, of course, we get an out-and-out election winner, which could happen at any minute now. So I think that's why you have to be a little bit careful with your trades. So we'll scan over to the US dollar CAD now. Now, this one finds itself at a very serious level of support as well. You can see we've had a fair bit of selling off this week. This level here around that sort of 130.50 level, which is pretty much the level I would be targeting here, is a really, really important zone. You can see that we can take it out to a weekly. Sometimes you need to really understand how strong the level is. And once you've done that, you can see that our green line that we've put here as support has been support for a very, very long time. Okay, and it was resistance way back in February of 18. And you can see the interactions right through here. So it's a very, very important zone. Needless to say that, okay, when we go to a daily, what we're looking for here is, and I'm talking more about next week more than anything else, is a change of trend on a smaller time frame. Now, as we know, when it's a very serious level of support, but we've had a very big sell-off, as you can see we've had here, from these highs around this level, we want to see a change of trend on probably a 4-hour as a minimum, okay? So we want to go back to a 4-hour chart there, and we want to see a series of higher highs and higher lows before we get involved in this. Now, remember, this is a very important zone, so if it is going to go long from this level, it's probably going to have several hundred pips to go. Like, it can certainly reach these 134s like it did not that long ago. So a good 300 to 400 pips there up for grabs. So there's no need to be rushing into this. You don't want to be the first person to be trading this long. You want to let the market unfold, let the momentum shift to an uptrend on at least a 4-hour chart, and then potentially start to look for the longs. We're separated away from the moving averages now, so we're obviously getting, it's picked up some speed this week. There's no question about that. A lot of this is fundamental driven, as we know, so we're still a bit of a wait and see holding pattern, but it does find itself at a very, very good level to have a rebound off this support zone. Okay, so I'm really watching this with interest for next week, but I'll be setting my targets on the smaller time frames and looking for the long. And of course, it could break this support zone. We know that, of course, but it needs to do evidence of that as well. I wouldn't be taking a break of a candle here. I would be waiting for this level to break and then maybe retest it from below it, which will cause the role reversal. Then it would make it a very, very strong shorting opportunity. So either way, I'm not fixed on any direction on this one. It's just a case of waiting and seeing, let the market unfold, because our price action has to tell us and determine what's going to go on here. We don't want to really be guessing and checking. Okay, we'll move on to the US dollar Swissy. We'll have a very quick look at this one. Painting a very similar picture. Okay, you can see that it's at a very, very strong support level here at around that sort of, it's almost at 90.50 really. You could probably, I mean, this is a pretty big time frame, but 90.50 to 90.30 area, this zone here, you can see it's had a very good interaction. Without even going to I haven't seen the weekly on this one yet, but you got to go out a long way to find any more support. But yeah, there again, it is. So, and this is why it's good to go through the different time frames. Even a weekly didn't show these levels here, but you can see this level here around that 90.30 area. And this would be a big zone. So you're talking about the 90 to 90.50 right through here, way back in 2011 and 2013. Okay, and even up to 2015 was a very, very important zone for it. A lot of interaction. Now, this is a monthly chart. This is a very, very serious time frame. We've got enough action on, normally I wouldn't pay as much attention to times that were happening 10 years ago because it does become a little bit redundant, but it was an important level then, so we have to give it a bit of respect. But when we go to a daily, we only have to go back to the June, July area to know that this was support here. So it's not like the support was not there for 10 years. It was there as recently as 4 or 5 months ago. So it certainly needs to be respected. But this is very similar to the CAD. Okay, we're looking for a change of trend on the smaller time frame. It's the only way I would trade this, and it's got to be a change of trend on a 4 hour. I wouldn't be accepting a 1 hour or a 15 minute on this, mainly because it's at a very, very important level after a pretty reasonable sell-off, and the upside is pretty good. You've got 250 pips at least to the 92.50 as your first point of call, and even up to the 93s if it breaks this area here and pushes up to the recent high back in September, and late September that was, so it was only 5 weeks ago. So what we're looking for here is a change of trend on a smaller time frame and aim for up there. Now, should this level get broken, again, we're not going to be taking a break candle because it's too important a zone to do that. We would be waiting for a retest from the bottom, so it would need to go lower and then come up and retest it from the bottom, giving us a roll reversal. Then we would be looking for the shorts. Okay, so certainly not interested in any shorts until that actually happens. All right, we need to see more than just a break of a candle, because that could easily be just a bit of a news flash, or it could be just a fake out. We don't want either of them. Either scenarios are bad for trading, so we want to see evidence. We want to see it break that line and retest it from the bottom. Don't forget, if it breaks this level, it's got some serious falling to do. So it's not like it's only going to be moving, 50 or 60 pips. It could be moving hundreds. So better to wait for the confirmation and let price determine that momentum is definitely on our side here. All right, we'll move on to the dollar index. No surprises here to see it at very important support, 92.50, very, very important level. We won't spend too much time on this. This is exactly the same story as the CAD and the USD Swissy. We want to be seeing a change of trend on this to be going in either direction. This is, although it's fallen, quite sharply over the last few days, I'm not convinced that, this is the end for the dollar index. We need to let, a lot of things unfold, especially in the next 24 to 36 hours for us to be, comfortable to trade this one. I'm pretty keen on waiting for next week to start to see the new trends emerge. But what I do like, and like I said earlier, a lot of the majors are very, very key zones, and that really bodes well for trading in any direction. When they do get out of those and start to trade in a trending sort of motion, we're going to get a lot more action because the price action will kick in for us, and we will be able to get involved in the easier trades and be able to trade off very key levels. All right, so we'll cover a couple more. The EURUSD, I'm looking at mainly the daily charts as you can see today, only because, like I said, we're not really interested in the trades for today per se, but more setting up for next week. Because I think the opportunities, up until the end of the year now are going to be quite good. We're going to get some established trends from very key zones on the majors, which really bodes well for a really good trading environment for the next 6 to 8 weeks before Christmas. So that's what we're really setting up for. The euro finds itself, the channel that we've had in place for a long time is still there, obviously. It's finding itself kind of in the middle of it. At around the sort of 118.20, very key level for it. You can see all the price action there. little bit of resistance. If you are going to trade this one, again, if you're hell-bent on trading and scalping and you can spend the time to do it in the next day or so, what you want to be doing is probably aiming for the key levels. Okay, so if you're going to go for the short, you're going to aim for the 20 moving average on the daily, which is a really good target because it's obviously moved away from it, and that would be the first point of pullback. Or if you want to go for the long, you'd be aiming for the 119 level, which we know has historically played a pretty important role in pulling this one up. We're certainly not looking for a long-term trend here. So if you do want to scalp, this is one of those ones that could be providing an opportunity because you've got two zones. You can go short or long with very key levels for it to aim for. I don't have a particular bias either way on this one because it is kind of in the middle of that channel, but anywhere between the 117 and 119 has been proven to be a very, very good trading environment for the last few months, really. So there's no need to change on that. If you see a smaller time frame change of trend in the direction, either to the moving average or to the 119, it could be the scalp that you're looking for. All right, the last one we're going to have a look at today is the US dollar yen. So this is one that has probably broken the mold of what we've been talking about with the previous pairs. This is the one that has actually broken the support and is actually, well on its way down. Like, it hasn't really, if you looked at this on face value, you wouldn't even know that, we've had one of the biggest weeks of news with a non-farm payroll tonight. It's just been absolutely selling, and it's down to a level now that has broken very, very key support here at around that 104. You can see that that's been broken by one very big candle. Now, this is one of those ones where if it does happen to continue to fall, I'm not one for jumping on a moving train. So, I mean, this has provided shorting opportunities basically right through every time it touched a 20 for quite some time now. But the thing with this one is you have to go out a fair while to actually see where the next support level is. And if it does maintain this candle and holds below here on the weekly, which it may well do, if it doesn't have a rebound tonight, it's going to do that. I mean, the next real level of support is around this 101 sort of 50 area, which is still 100 pips away, or a couple of hundred pips away, sorry. And that's the next real level of support. Like, you could argue you could find a little bit of trouble at around the sort of 102.50, but really the main support is quite a bit lower than that, around the 101.50. So this is one that is fast tracking past the other US dollar based pairs. So it has actually broken the support that we've been talking about. In this case, though, I'm still reluctant to jump in and trade this, mainly because we've still got a lot of uncertainty from a fundamental standpoint. But if it does come back and retest the 104 level here, which is marked by this green line, that is going to signal the role reversal. I would probably be looking for the shorts. And if it takes its time doing so, the 20 moving average will catch that up, and it'll be a double level of resistance at that point, which could provide some really good shorting opportunities. Failing that, for this to go long now, it's going to have to be pretty much a break above this level and a series of higher highs and higher lows, and it would need to be on a 4 hour. I wouldn't be looking at anything under a 4 hour to go long on this. So this needs price action to confirm what we want to see. We've got the basis of a descending triangle here, so you can see that and we've had this for a little while. You can see that it's been shorting for quite some time. The pressure has been on the support, okay, and it has broken. It's broken fairly early inside that triangle, but you could argue the triangle started all the way up here. So, realistically, the bias is to the short here, but again, you would want to see some price action reverse up to this level here. I think it bodes well for some good trades next week. I think it's really planning and just isolating your zones, making sure that you got all your levels and alarms set. Not so much probably for today, but early into next week. Hopefully we'll get an out-and-out result in the US election. That's one thing we don't have to worry about anymore. And hopefully we get some good non-farm payroll numbers, which will start to get these markets moving on all of the majors out of these key zones and provide us some really, really good trending opportunities into the next 4 to 6 weeks before Christmas. All right, so I hope everybody's had a great week. I can't imagine there was a lot of good trading opportunities because everyone was probably just watching. But if you did, I hope you did well. Keep an eye on these key levels and keep an eye on the non-farm payroll results tonight. Just be remember that they're on tonight, so it is going to halt a little bit of the big movements today because it is another uncertain event that needs to be cleared before next week, before hopefully the markets start to move. Have a great weekend, everyone, and I look forward to seeing you next week.